Therefore, the price rise and fall is after the operation of the funds. The most direct result we were able to observe. And price action. That is, by directly observing the price movements. To get market information. Analyze the way decisions are made. To sum it up briefly. When you see the chain behind the price action. Division of different analytical methods. It's essentially about looking. Where in the chain do you get the information? Price action. It is to get information directly from the price. Methods of analyzing the market. As for whether it is a rising and falling band or a candlestick, it is observed. Whether it's a candlestick pattern or a support or resistance is studied. As long as it is through the price. To get direct access to market information. It's all price. Behavior. It's just that different indicators are used for technical purposes. Different strategies. Price action can also be analyzed in different ways. And different analytical tools only. Learned what price action is. Then the second question is why we should study price behavior. To understand this question. Or go back. The price action is behind this chain. Let's think about the stock market as an example. There are a lot of people in the stock market. We'll do fundamental research. Research the industry. Research the company's operating conditions. Through the study of fundamentals. Find the potential for future growth. Companies with intrinsic value. Then go buy and hold. To put it simply, it's about finding good companies and good industries. Good price. Long-term holding. This one is for people who do stock trading. It's a better way to trade. In the long run. The growth of a company's market capitalization. With its own fundamental situation. There is a relative deterministic correlation. It's like the relationship between productivity and economic growth. In the long run. Increased productivity. It will bring about economic growth with certainty. Behind the fluctuating prices. There is such a correlation that is relatively deterministic. Go find good industry, good company, good price. Long-term holding. This is a suitable way to do long-term trading. I also talked about trading and investing in a video before. Also to make the difference. It is also divided into long-term trading and short-term trading. Above. Long-term trading makes incremental money from the business. But if you look at it in the short and medium term. A quality company. Will the price only go up and not down? The long-term value of a company can vary from days to weeks. It will be reflected in a few months. Apparently not. The price of that stock. Why is it going up and down all the time? The fluctuation of the price is due to the order. And what about behind these orders? Are all funds to earn short-term spreads? So before talking about the way of trading, think about what kind of money you're going to make. If it's a long-term trade, then you should study the fundamentals. Because in the long run, able to be in a growing industry, companies that gain a competitive advantage, the value of the stock will also grow deterministically. It just takes time. And there will be fluctuations along the way. But if what you are doing is trading in the short and medium term, there are a few questions that need to be considered. The first is about fundamental analysis. The development of a company has to go through a certain process. Whether it is the implementation of the policy or the execution of strategic decisions. In the end, the results are achieved. It's all a long process. These values will not be visible in the short term. And short-term price ups and downs. Actually, it's just because of this information. Attracted speculative funds. Fluctuations. So the news is hot. Short-term fluctuations brought about by favorable policies. In essence, it is also a game of money. So in the short and medium term. The value of fundamentals. It can't be manifested in a short period of time. Between fundamental information and short-term price movements. Nor is there a definitive relationship. Second, technical analysis. Recent episodes. I explained a lot of familiar technical indicators. From the principle of the indicator to the final application. After we have studied the technical indicators clearly, it can be understood. Technical indicators and price movements. It's all about deterministic relationships. Because indicators have a fixed formula. What kind of price action? After a fixed formula calculation, you will be able to get the pattern of what kind of technical indicators. But the basis of technical indicators is that there is a price first. At the same time, if from the point of view of obtaining market information, obtained through technical indicators,